In this video, we will look at the piercing pattern and I will explain what that pattern is. We will look at a piercing pattern without confirmation and I will explain what that is again. So this is a daily time frame chart of NVIDIA. Let's look at the piercing pattern. This is a piercing pattern. Okay. So what are the conditions for a piercing pattern? Number one, it has to come after a downtrend. A piercing pattern is a bullish reversal pattern, which means after this pattern, the price will either go sideways or it will go higher. Either of these two conditions are most likely to happen. So the first condition is it comes after a downtrend. The second condition is both of the candles should be relatively long compared to the other candles on the chart. Third condition is the opening of the second candle should be below the low of the prior candle. So in this case, as you can see, the opening is below the low. Fourth condition is the close of the second candle should be above the midpoint of the prior real body. So if this is the midpoint of this real body, then the close of the second candle should be above that midpoint. That's why it's called as a piercing pattern. It pierces through that prior red color candle. And number 5, the low of the piercing pattern becomes support. And on this pattern, you are allowed to initiate a trade, which means that it's a very, very powerful candle pattern. It's a very powerful bullish candle pattern. So that's the piercing pattern for you. This satisfies the conditions for a piercing pattern. Next, let's come to confirmation. There are two kinds of confirmation. First, it has to confirm some prior support, which in this case, I don't see it happening. I don't consider that candle as a support because it is not really a wave. So it doesn't confirm any prior support. Next, if you look at the next candle, if the next candle closes above this price, then that is called as the price confirmation because it confirms the bullish implication provided by the piercing pattern. Another point to notice here is that you have a falling window here. Falling window becomes resistance. So I have drawn a line at the upper level of the falling window. This is the lower level. As you can see, this green candle has closed above that upper level, which means the window has been broken. So that window is no longer valid, which means if I were to go long here, so if I were to take an entry here, put my stop loss here, then my target would be this. So that would be the risk and this would be the reward. I think it's a 2:1 trade or 2.5:1 trade, reward to risk. Okay. So that's how I would trade this pattern. But since it doesn't confirm prior support, the probability that the price will go up reduces. Another thing is the price confirmation. So let's look at what happens on the next candle. So as you can see here, the price of the next candle has closed below the close of the piercing pattern, which means we did not get price confirmation at all. So here you have a nice piercing pattern which doesn't confirm any support and we don't even get price confirmation. So that trade would be a risky trade. Imagine a piercing pattern where it's confirming prior support. So there is maybe some support line here, right? And that it gets confirmed because none of these two candles closes below the support. This is the opening price, not the closing price. So it confirms support plus you have this candle which is closing somewhere here. So when you have those kind of confirmations, you can confidently take the trade. But in this case, that did not happen. So That is the reason why I would not trade this piercing pattern. So this teaches us a very important lesson. Just because you see a pattern doesn't mean that you have to take the trade. You have to look at reward to risk ratio. You have to look at confirmations. You have to look at something called as market context. You have to look at the overall technical picture. If this price is near resistance, then you cannot go long there. Now in this case, the prices indeed went up, but that's not because of your trading skill. It's just because the market will continue to do its own thing, right? So as a professional trader, I would not take this trade. And I encourage you to go to this link to learn more about the piercing pattern. There I have uploaded my Japanese candlesticks trading mastery program. It has more than 1000 chart examples like this, and students from more than 170 countries are already doing that training program. In level, it has multiple levels of training. In level 1, I talk about the piercing pattern in detail. I give you 20 examples just on the piercing pattern. And apart from piercing pattern, there are 7 other patterns mentioned in level 1. Each pattern has got 20 examples. Okay. So please have a look at my training program. If you are using a trading system, so maybe you are using RSI or stochastic or whatever you are using, I encourage you to continue using the system, but add to that the power of candlesticks. And everybody knows candlesticks, but I'm talking about deep knowledge of candlesticks. There is a lot more to learn about candlesticks than normally is available online or on the internet. We can really go deep into this because this is a 250-year-old science. I would not call it a science, I would call it an art. Okay, the more you get into candlesticks, the more you realize that it is an art, not actually a science. So, those were the reasons I would not take this trade. I would look for other opportunities.